This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is April 29th, 2021, show number 256. Well, Apple put out some stellar earnings. I guess I always call Apple, Nick, I don't call it a stock. I call it you're buying iPhone futures.
I think you're right. I like that. And that's exactly right. They had some really good numbers. Apparently, I really don't even look too deep into them, but the stock's only up 50 cents today. It's really not having a great session. In fact, it's a gap and crap. It was gapped up above 137 and it's been fading really throughout the morning. It's trading around 134 a share now, so we'll keep it on our radar. This is not a great reaction from the earnings announcement, so we'll see. The market usually knows better than the numbers. And then you had Facebook today. They also reported earnings. That stock at the moment is doing a bit better, but it has faded a little bit, but it's still up about 17 points right now, which is a 5.5% gain. So pretty good move for Facebook overall.
Yeah, so Facebook's earnings had staying power. They were monster earnings, but again, going back to the fundamentals, which is I know is something you don't ordinarily do, their sales in North America, at least Canada, the U.S., were flat.
Yeah, and that's probably saying a lot. They have a lot of companies, so people just think of Facebook as the one platform. They have Instagram and WhatsApp and a whole lot of other stuff that they're always in the pipeline with. But that's going to be interesting. And if I look at the Facebook chart, we're nearing parabolic territory. Maybe there's another 10 or 12 points of upside, but we're getting to that parabolic level. And you know what that means, Kerry, when we go parabolic.
Yeah, well, it only means something with stocks. For certain other digital currencies, it means absolutely nothing, according to the naysayers, Nick, right? We won't get into that now.
Oh. All I can say is time will tell.
Yes, time will tell. Time always tells. And things are, I just think back to President Eisenhower's quote, things are more like they are now than they've ever been before.
Yeah, and that's one of my favorite presidents. So
mine too. So like the 9-to-5 president, and hit the golf course, never worked up a sweat, but behind the scenes, he was really effective. And that's what they never want to admit. But anyways, so what do you make of Apple? That's a really bad sign when they put in these blockbuster earnings and it's Yawnsville, isn't it?
Yeah, and the other negative for Apple, now, in all fairness, the stock is above its moving averages. It's 20-day, it's 50-day, and it's 200-day moving averages. But the stock is yet to make a new high for 2021. So the NASDAQ and everything else is pretty much at their highs. But when you look at Apple, that put a top in on the 25th of January at around $145. It's still not there yet. Now, I'm not saying it can't get there. If the stock can consolidate here, maybe it pushes again, but it has not made a new high. And, everybody should keep an eye on that because this is the world's largest stock by market cap.
Yeah. So it's really a proxy for the entire market, even though it's a tech stock, but it's certainly a proxy for the FANG stocks. And if it's not making new highs on these kind of earnings and Facebook is up, but it's not making new highs, this is a case, Apple's always been the stock though, Nick, of buy the rumors, sell the news, right?
Yeah. And that's, I guess, maybe something that feeds into it today. So we don't want to make too much out of it. We've got to really watch this one over the next 2-3 weeks and see, how it plays out. But not a great showing today. Now, Facebook is making a new high today. That stock's having a good session, up 5.5% as we speak. But we'll have to see where that one finishes as well, because that's starting to fade as we go along here. And another thing today, the market's gapped up big today at the open, and they've all faded. The Dow has gone negative. The Russell 2000 is negative. The NASDAQ composite is negative, and the S&P 500 is still holding a small gain, a 5-point gain. So it really has been a big rollover so far this morning.
Yeah, so they're fading, and this is a sign if it turns into a sell-off, right?
Well, if you get volume today, you better pay attention. I've been saying, waving that caution flag, but it's not how they open them, it's how they close them. So we're going to have to watch the close. But if we close on volume, this is a very important trading day.
All right. So, hey, what about the bond bond market. We had soothing words from Jay Powell, and everybody's happy again.
Yeah, but, yields are up today, and that's probably the Fed's worst nightmare, in my opinion. So bond yields today up about 5 basis points on the 10-year U.S. Treasury note. And again, when bond yields go up, that usually has a big effect on technology stocks. And it also tells us, who wants to really hold U.S. bonds? Does anybody really want to hold them? I mean, if you're going to buy a 10 or 30-year Treasury, you'd want to get paid a little bit of interest, I would think. Right now, the Fed is buying $120 billion a month worth of U.S. Treasuries and mortgage-backed securities. So if nobody wants to own these things, there's big problems on the horizon. I happen to think there's big problems anyway coming. I've been, very vocal about that. But, this is just putting a little fuel on that argument.
Yeah, well, you just look at the economy. Although the GDP grew at over 6%, right? We got that flash report in there. And, so look at the level it was going from. But at least now we're really seeing things start to open up around the country, Nick.
Yeah, and even today you did have an announcement that New York, I guess, is going to open up 100% soon. So, that's a big state that's been really shut down for ages now. And they're even going to open up. But, once you get back to opening up, everybody opens up. What's left?
Yeah.
That's it. I mean, so this is the reopening trade. That's what they're calling this, the reopening trade, because things were so shut down. And we hear about the semiconductor shortage. They just stopped building semiconductors because nobody went to work. But the reality of it is, okay, now we're all back to work. Everybody's opening up. Well, we're not really back to work because some people are still home collecting a government payment. But, when things reopen fully, what's next? What's the next driver? The thing is, there is no next driver. The next driver is higher taxes across the board, especially on people that are producers. And, who knows what else we got going on geopolitically right now. I mean, I don't know if anybody watched the speech last night, but, that was really just calling out Russia a little bit, if you ask me. And, we see all the defense stocks up today. So, this is what we're looking at, is what we're looking at going forward. So I would definitely be on the caution side here. I think the markets, always get ahead of themselves a little bit. They get a little bit euphoric, but this is not a great earnings season from what I see so far.
Hey, and almost as night follows day, Nick, I know exactly what you're going to say about this when I mention it, but I'm going to mention it anyway. Of course, I mention it. We do it every day. But gold and silver getting totally hammered, although they're recovering quite a bit.
They are recovering. Yeah, they are recovering quite a bit right now from the big hammering this morning. So, if you look at gold futures right now, they're only down $5. So, I mean, I love gold going forward, as you know. Today, I did close out my gold mining trade because I just had such a gain in there. I said, you know what, if they take this down further, I don't want to lose that profit. I could always jump back in, and I will do that. But I hold, gold options. So I think that's my play going forward. But this is pretty interesting to see gold getting hammered this morning. Obviously, yields being higher, that does hurt gold as it does hurt technology stocks. But overall, we'll be watching this gold pattern really, really closely here, because if we get that higher low pattern, which we have in place right now, that sets up for another springboard move higher.
All right. Higher lows is always what we like to see. And silver is down under 26, but barely. I mean, if this is all they got here, Nick, this ain't much. These things are going higher.
Silver's down 0.5% on the futures today, just 2 pennies. It's at 25.98 on silver futures. So again, they've had great moves. I'd love to see the consolidation. That the silver consolidation, first off the bat, is very, very good right now. So that should be noted. It probably even has a little bit of a better consolidation pattern than gold, which is still pretty good there as well. So everybody should keep that in mind. Anytime you consolidate, what you're looking to do, as long as you don't go out and take out prior levels, you're just building a base to make another advance.
So it's base creation. And I got one favor to ask you. If you could do a Bitcoin or maybe an Ethereum chart and just show us the peaks and kind of show us the trend lines there, really appreciate it.
I could do it on I could do that on Bitcoin, no problem.
Yeah, because I've gotten some requests besides flames, besides angry tweets. People want to see what you see in this chart, Nick, because charts, right? The charts don't lie.
No, and in fact, the last time I even, I think I gave you a chart where I said we would put one out for you. I said Bitcoin would go down to 49,000. Look where the low was.
Yeah.
So, the low was, I believe, at 48,000, give or take, a wild volatility swinger. And then you got a nice pop in it. If that level gets taken out, then there's real problems out here. So, again, I'll mark you up a nice chart. I'll send it over to you shortly.
Great.
But, again, we talk about all these levels. You got to take out one level before you go to another level. And that's something that, people don't realize. They just think that things go down in a straight line. Nothing goes down in a straight line, just like nothing goes up in a straight line. There's always peaks and valleys throughout every move.
Yeah. And like we said, asset class, replacement for the U.S. dollar, not yet, but that could very well be down the future. Something's going to replace it. We know that for sure. I don't think the world's going to trust yuans to do it, honestly, Nick, no matter how important, no matter how big the economy of China gets. And people are becoming more and more distrustful of fiat currencies, which bodes well for gold, silver, and probably for cryptos. Well, but that remains to be seen. They're in the proving stage, in my opinion, although you may or may not agree with that. But in any event, make sure you go over to inthemoneystocks.com. Take a look at Nick's trading record and other important info there. And don't forget the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Send us your emails to my address, kl@kerrylutz.com. And Nick, we will Zoom tomorrow on Friday. And let's see if this market gets really ugly today. I guarantee you tomorrow it's going to be a fabulous Friday with a PPT in full operation mode.
Yeah, Fridays it has been basically what we call the Friday effect, where the market seems to go up every single Friday. As for today, keep an eye on the volume. If the volume is light, just disregard any downside.
Sounds good, Nick. We'll talk to you tomorrow.
Thank you.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.